The thing that scares me more than the long government bond is the structure of the debt, the corporate junk debt market in the United States. We've had an explosion of junk debt, and investors have been served well by owning junk debt for the last 40 years because as the interest rate went lower, the cost of capital went lower, the ability to service the debt and the ability to monetize assets created by the debt has been great. But rising interest rates turn that around. What scares me specifically is the emergence of an asset class in ETFs called high yield or below investment grade or junk debt ETFs. And there's trillions of dollars of this stuff out there. How much protection you want, whether you regard the asset class as an investment or a speculation. So let's go through the options. I suspect that everybody should start their gold portfolio by owning gold itself. The least troubling, the least risky way to own it. Own it in a segregated account, that is to say, gold held in your name at a storage facility that you understand, a Brinks, a Loomis, a Viamat, not in a vaulting facility owned by Schlepp, Schmuck, and Schmo, who might run off with your gold. Some people prefer to own their gold at home. I laughingly regard this as midnight gardening. That exposes you to a whole different set of risks, ones that people need to consider before they implement midnight gardening. I am not an enemy of the ETFs or in particular the Sprott physical gold certificates, which are to say exchange-traded, audited hoards of gold, where you control evidence of ownership rather than the gold itself.
BlackRock's Bitcoin mining investments. BlackRock, a global asset management giant with over $8 trillion in assets, has strategically invested in 4 out of the 5 largest Bitcoin miners, cementing its position in the Bitcoin mining sector. This move comes after BlackRock's surprise application for a Bitcoin ETF. Bitcoin mining challenges and BlackRock's role. The Bitcoin mining industry is grappling with challenges due to increased mining difficulty and reduced profits. Despite this, BlackRock's significant investments in major mining companies indicate its potential role in supporting struggling miners. Crucial Crypto Week, Grayscale lawsuit and Bitcoin ETF decisions. This week holds significant importance for the crypto market. A ruling in the Grayscale versus US SEC lawsuit is expected, along with decisions on 6 Bitcoin ETF applications, including one from BlackRock. These decisions could trigger a market recovery. Market sentiment and Bitcoin price. Optimism surrounds a Grayscale victory in the lawsuit, potentially leading to a spot Bitcoin ETF approval by the SEC. This positive sentiment might drive Bitcoin's price above the 200-week moving average, historically indicating a buying opportunity. Bitcoin's price movement and potential rebound. Bitcoin's price has remained sideways after a dip below $25,800. Technical indicators like the narrow Bollinger Bands suggest an imminent significant price movement. Traders are closely monitoring factors like trading volume and the DXY US dollar index for insights into a potential recovery. Now let's continue our enlightening discussion with Rick.
Overcome the damage that we're going to do to people's psyches today. You know, the top line number is that the U.S. government on balance sheet owes $33 trillion. That's with a T. That's 12 decimal point, 12 data points to the left of the decimal point. But that's not the worst of it. The net present value of obligations of the U.S. government, things like Social Security, Medicare, Medicaid, that adds over $100 trillion to the recourse liability of the U.S. government. So as Americans, we owe each other, or more precisely, the spenders owe the savers, something like $130 trillion. Putting that into perspective, about 5 times nominal GDP. And we propose to service that debt with a budget that's in deficit $2 trillion per year. That's the first part of the nervousness. The second part of the nervousness is inflation and the perception of inflation. The big thinkers of the world, Julia, the so-called rich men north of Richmond, would have you believe that inflation in the United States, CPI stated rate of inflation, has cooled to 2.8%. I beg to take issue. That 2.8% number doesn't include food or fuel. Your viewers will note from my girth that I like to eat. So inflation statistics that don't allow me to eat are of very little use to me in terms of calculating my basket of goods and services. But even crazier, and I want your listeners to listen to this CPI number doesn't include tax. The most important household expense in the United States is tax. It is greater than shelter. It is greater than transportation. It is greater than food. It is greater than energy combined. When I tried to do a sort of survey of the deterioration of purchasing power of savings in the items that made up my basket of goods and services, I found that my savings were losing purchasing power at about 7% compounded. I would ask your listeners to attempt to do an informal survey of their own. If then you assume that including tax, food, and fuel, that your savings buy you 7% less every year, let's look at the arithmetic around interest rates. The U.S. 10-year Treasury right now pays you about 4.2. In a currency that is declining in real purchasing power by about 7%. In other words, the U.S. government absolutely guarantees that they will make you 2.7 or 2.8% poorer every year for 10 years. Jim Grant calls this return-free risk. The combination of out-of-control debts and unserviceable debts with negative real interest rates on savers is, I think, the most important economic concern that Americans should have today.
Don't forget to join us as we explore the unfolding events.
Most people have been lulled into a sense of security by the fact that in the period 1982 to 2022, we went through 40 of the most benign economic periods in the history of humankind. And people's anticipation of the future is set by their experience in the immediate past. The consequence of that is that there has been too little fear. Precious metals as an asset class. It's important to understand this. Precious metals as an asset class comprise 0.5% of the savings and investment assets of Americans across the country. The 4-decade median is 2%. I believe that gold and precious metals assets will return to mean, meaning that demand for them will increase fourfold. I don't have any idea what the impact on pricing will be, but I suspect it'll be much more dramatic than other people think it will be. And Julia, the nice thing about gold as an insurance asset class, if you think about its price volatility, $35 to $850, or in the decade of the 2000 to 2010, $250 to $1,850, a 7-fold increase. If you think about that, if you had 5% of your net worth denominated in precious metals and precious metals related assets, if those assets increased in value 4 or 5 times nominal value in the course of the decade, that increase in value would shelter a lot of the losses that you suffered elsewhere in your portfolio. And that's what I'm asking people to consider doing.
That wraps up today's Crypto News highlights. Stay tuned for more updates, insights, and analysis from the world of cryptocurrencies. Please share your thoughts in the comments below. Don't forget to like this video and subscribe to our channel for more engaging content.